The work is making you sigh. Clearly, Elon Musk has had a rough few days. Tesla dealerships have become the target of protests across the country, and its stock price has taken a big nosedive.
Elon Musk made the biggest gamble of his career, and now it's collapsing. Tesla just posted one of its worst financial quarters in years, and insiders are calling it a full-blown crisis. Profits have tanked, deliveries are down, and Wall Street is losing patience. This isn't just a stumble. This is a warning sign that the empire Musk built may be starting to crack. And the worst part? He saw it coming. While competitors were laser-focused on production and innovation, Musk spent the last year entangled in politics, giving speeches, pushing policies, and splitting his time between Washington and Tesla's boardrooms. Investors warned him, analysts raised red flags, but Musk kept doubling down until now. In just a few months, Tesla's stock has plummeted, its brand is under fire, and its once loyal fan base is beginning to ask hard questions. How did the world's most disruptive automaker end up in financial quicksand? And can Musk course correct before it's too late? This isn't just about earnings, it's about leadership, reputation, and the future of a company that changed the auto industry forever. In this video, we're pulling back the curtain on the mess Tesla's facing, the political gamble that made it worse, and why this might be Elon Musk's most dangerous moment yet. Stick around, because the breakdown starts now. Tesla's financials for Q1 2025 sent shockwaves through the market. The company posted a net income of just $409 million, down 71% from the same quarter last year. Revenue came in at $19.3 billion, a 9% decline year over year, falling short of Wall Street expectations by a wide margin. Vehicle deliveries, long seen as a measure of Tesla's growth engine, also slipped 13%, marking one of the company's steepest quarterly drops in years. Automotive revenue, which makes up the bulk of Tesla's business, fell by 20%, signaling deeper issues beyond just supply chain hiccups. Behind the numbers, the problems are stacking up. Demand has softened, especially in regions that were once major strongholds for Tesla, like Western Europe and parts of the US. Price cuts meant to stimulate interest have eroded profit margins, and rising competition from EV rivals is pressuring sales across multiple segments. Even the once promising Cybertruck launch hasn't delivered the lift many expected, as early demand was offset by production complications and lukewarm consumer response. What's also hurting Tesla is the weakening of its energy and services divisions, which failed to pick up slack from underperforming vehicle sales. Cost-cutting efforts are underway, including trimmed marketing budgets and slowed hiring, but analysts warn that slashing too hard could stall innovation. Investors are starting to question the company's financial resilience, especially as it commits to ambitious projects like full self-driving software and autonomous fleets without immediate payoff. Some experts believe Tesla may need to rethink its product roadmap altogether if it wants to recover lost momentum. In short, the numbers paint a picture of a company facing not one, but multiple economic headwinds at once, and while Tesla has weathered storms before, this one feels different, more structural, more strategic, and with far less room for error. Coming up, we dig into the role Elon Musk's political ties are playing in this collapse, and why it's turning into a public backlash Tesla didn't see coming. While Tesla's balance sheet is under pressure, public opinion may be shifting even faster, and Elon Musk's political entanglements are at the center of it. Over the past year, Musk has taken on an increasingly visible role in US politics, joining President-elect Donald Trump's Department of Government Efficiency, or DOGE. The department was designed to reduce federal waste, but Musk's dual role as a government advisor and the CEO of a publicly traded company has sparked criticism from both sides of the aisle. Concerns about conflicts of interest erupted after a Senate report surfaced last week, alleging that Tesla received favorable regulatory treatment while Musk participated in closed-door economic planning sessions. The report estimates that Tesla could face legal liabilities of up to $2.37 billion depending on the outcome of ongoing investigations. That number is alarming to shareholders, but the damage to Tesla's reputation may be worse. Protesters have staged walkouts at Tesla showrooms in New York and Los Angeles. A massive banner reading "Save Tesla, Fire Musk" was flown over Gigafactory, Texas, drawing national media coverage. Longtime Tesla customers and even former employees have gone public, saying the company no longer represents the innovative spirit that once set it apart. Brand surveys show a steep drop in favorability among Gen Z and millennial consumers, key demographics for Tesla's future. In Internally, staff morale has also taken a hit. Anonymous employees report confusion over leadership priorities and frustration that company culture is being shaped by political optics rather than product performance. Musk, known for his defiant attitude, has dismissed the backlash as media-fueled noise. But with the company's credibility on the line and regulatory eyes now watching closely, this is a situation that can't be brushed off. Up next, we examine how markets have responded to this unraveling and why investor confidence is dropping fast. The fallout from Tesla's financial troubles and Musk's political distractions is being felt hard on Wall Street. Tesla's stock has fallen over 40% since the beginning of the year, wiping out approximately $150 billion in market capitalization. For a company that once enjoyed near-mythical status among investors, this represents a sharp reversal of fortune. Analysts are growing increasingly cautious. Several major firms, including Morgan Stanley and Goldman Sachs, have downgraded Tesla's stock outlook, citing leadership distraction, inconsistent financial performance, and heightened regulatory risks. Some hedge funds have begun to quietly exit Tesla positions, reallocating capital toward newer EV competitors and established automakers with stronger governance reputations. Retail investors, once Tesla's most vocal champions, are also showing signs of disillusionment. Sentiment across trading forums and social media groups has turned more critical, with many questioning Musk's ability to juggle Tesla's needs alongside his growing political involvement. Long-term bulls who once brushed off volatility are now demanding more transparency and strategic focus. Another growing concern is Tesla's vulnerability to external shocks. With Musk tied to controversial policy initiatives, some investors fear that Tesla could be dragged into broader political fights that damage its international partnerships or brand image. As global economic conditions remain fragile, investors are placing greater premiums on predictability and management stability, areas where Tesla currently looks shaky. Bond market data backs this up. Tesla's corporate bond yields have widened, suggesting lenders now see greater risk in the company's future cash flows. It's a stark change from the confident financing terms Tesla enjoyed just a year ago. Meanwhile, insider selling has picked up, with some high-ranking Tesla executives cashing out portions of their holdings, a move that has not gone unnoticed by financial analysts tracking insider confidence. The message from markets is clear. Until Tesla addresses leadership concerns and stabilizes its operations, investor trust will remain fragile. Up next, we break down how competitors are taking advantage of Tesla's missteps and why the EV battlefield looks very different today. Tesla's dominant position in the EV market is starting to erode, and its rivals are moving fast to fill the gaps. In the United States, Tesla's share of the electric vehicle market has dropped from over 65% 2 years ago to just under 50% today. Brands like Ford, Rivian, and Hyundai are carving into Tesla's customer base with models that are priced more competitively and often boast features Tesla promised but hasn't fully delivered. Overseas, the competition is even fiercer. In China, BYD has overtaken Tesla in EV sales, offering a broader range of vehicles that appeal to different price points and consumer needs. In Europe, Volkswagen, Renault, and emerging startups are aggressively expanding their EV lineups with strong government incentives behind them. Meanwhile, Tesla's much-hyped Cybertruck, once billed as the next evolution of electric mobility, is losing momentum. Prices have been slashed by nearly 50% on some configurations just to maintain interest, a sign that initial hype is evaporating faster than expected. Production delays, quality issues, and regulatory scrutiny over safety standards have further slowed Tesla's ability to capitalize on new markets. At the same time, legacy automakers are stepping up. General Motors and Mercedes-Benz are deploying EV models with luxurious interiors, extended ranges, and robust charging networks, all areas where Tesla once held clear advantages. Even on the tech side, Tesla's lead is shrinking. Waymo and Cruise are rapidly scaling autonomous driving programs, and Rivian is making strides in software integration that rivals Tesla's dashboard ecosystem. Once celebrated for its disruptive innovation, Tesla now finds itself reacting to competitors rather than setting the pace. As the EV landscape diversifies, consumer loyalty is also fragmenting. More options mean Tesla can no longer rely on brand prestige alone to maintain its edge. With pressure mounting from every direction, Tesla's next strategic moves could decide whether it remains a market leader or fades into one of many players in a crowded field. Tesla's future is now hanging in the balance. Elon Musk's pivot back to Tesla could signal a comeback, or it could be too late to undo the damage. Financial strain, public backlash, and fierce competition are tightening the pressure. What happens next will define Tesla's place in the EV race for years to come. But we want to hear from you. Do you think Musk's renewed focus is enough to save Tesla, or has the brand already taken a hit it can't recover from? Drop your thoughts in the comments, like the video, and subscribe for more deep dives like this.